What's up, everyone? Welcome to Mind Money Method. I am Swing Pony, and this is episode number 1. I am super excited to have all of you join me. This show is going to be all about tapping into the mindsets of other traders and learning about their different tips, techniques, and strategies that they use in the market. We have an incredible guest tonight, Radio Silent Play. He's my mentor. He's an amazing trader. And he is just full of insightful nuggets of wisdom and simple strategies that we can incorporate in our day-to-day trading. So super excited to have him on, and thank you guys for tuning in. Let's get the show on the road. All right, so I hope everybody is having a happy Sunday. Before we get started, I want to talk a little bit about what we saw going on last week in the market. Thursday, we had a deep red pullback, and old me would have probably panic sold all the way down. Let me pull this chart up. Yeah, so nice fat red candle on Thursday, and everybody out there who did the whole there's a rug pull coming, the market's going to crash, kind of had that day where they could say, I knew it. And then naturally on Friday, we had that beautiful green recovery. So I want to know how you guys handled it. I want to know if anybody panic sold, if you ended up buying the dip, if you, were just very selective and picked a few things. I know for me personally, I tried to buy a couple things that maybe hit the 200-day moving average, like IDEX I bought a little bit more of. Any other like high conviction plays I kept an eye out for, but tried not to panic on the red day. And, Friday again was proof of why we don't panic sell. So one of the biggest things too for me in terms of navigating sort of the what's going to happen in the market, is there a correction coming, and all of that is making sure that I always have a plan in place. And that way I don't worry about panicking and, making the wrong moves in the market just based out of emotion. And another thing that is super important to me is not using a mechanical stop loss. And that big red candle is why, because if I had stop losses set, and that happened, I would have been closed out of my positions. But Friday, we had a gorgeous recovery and everything was good. So excited to see what this upcoming week brings for us. I know Richard Branson went to space today, so we'll see if tomorrow's a sell the news kind of event for Virgin Galactic. I am holding on to some Astra still, which has been threading the 8-day moving average again. It's looking strong. So let's see what happens. I am just about as ready as you guys are to bring on radio. If you don't have a trading strategy, I highly recommend grabbing a pen and paper and just tuning in, because radio has provided one of the most simple but significant strategies that you can use in the market. I'm always appreciative of anybody who can simplify something like trading, because there are just so many different outcomes and options and ways that things can turn out. And for somebody to be able to give you a clear set of guidelines and rules that can protect you regardless of market condition is awesome. So,
hey, before we bring on, I just want to interrupt right quick. Before we bring on radio, I just want to make sure that your AirPods connected right, and we're not listening to you through your kind of other mic. Just make sure that your AirPods connected. Just want to make sure we got that good audio.
Should be.
Everyone, all right, there you go. Looks like everyone's excited. Anyone?
Okay, y'all hear me?
There
okay?
You go. I think we're good. Let's go. Let's go ahead. Let's bring on radio.
Okay.
Here.
All right, radio, welcome.
First off, I just want to congratulate you on the show. Watching you and your timely success and I'm looking forward to your growth. So I'm really honored for you to pick me and have me as your first guest. So I really appreciate it.
I appreciate having you on, and I think what's super sweet is, when I first started trading, I did pretty much what every rookie does, and I bought at the top, I panic sold, I made all the mistakes, and just had no idea what I was doing. But it was when I stumbled upon your trading style that I really was able to change my direction in the market and actually be profitable. So to have the same guy on that taught me almost everything I know is awesome. Very happy to have you.
Well, I heard some key words there. And one of the things I'm not, opinions are opinions. There is no right or wrong in this. But I heard you say mistakes. I look at everything as an experience, because the thing about life is that you have to go through them, right? So you could start seeing and be aware of what's going on, right? So I don't work in duality. For me, there is no right or wrong in this. It's experience, but we learn from these experiences, because without those experiences, right, we're not going to grow. So as far as mistakes, honestly, it's just life in general. We're looking at it through a perspective. And once we understand that, we start realizing that we need these experiences to grow. So I'm not over here trying to kiss people's butts or trying to sound smart. This is not what it is. What I want traders to understand, and people that do this, is the reason we do this is to not do the things that we don't like doing. Because right now it sounds like you love this, right? You enjoy this, right? So that's part of this. That's part of the process. If you're doing something that you don't like and you're forcing, then you're not in a state of flow. Okay, then what you're doing is you're using what you call the force of Caesar, and that in itself is explanatory. So I just want to kind of let people understand this. When you're doing this, you have to have some type of enjoyment out of it, because that enjoyment will pan out, and you have to have that confidence, right? Because without confidence, this isn't going to work. Belief is the most powerful thing that you have, and then we're going to go over that.
Yeah, well, one of I think it was Miss Izzy, she said something that really, really stood out to me once. And it was, be aware of what your personality traits are like outside of trading, and whether that's your strengths or your weaknesses, and be mindful of those and see how they apply in the trading world. Like, one of my flaws, we could call it, is I can be indecisive. I could get stuck in the gray area and not really know how to make a decision. So that brings me to your rule of three, which is sort of the foundation of your trading strategy that I learned from you, and why it has been such a game changer for me, because it eliminates all of that gray area of like, well, maybe I should exit here, but what if it goes up tomorrow? Or, oh, I don't know, should I buy this? It doesn't leave a ton of room for debate and getting lost in indecision and all of that. So with that said, I want you to tell me about the rule of three. I want you to tell everybody here about the foundation of your trading style, the law of infinite return.
All right. So it was experience, right? To understand that we have to have some type of rules, right? Because we understand the laws of the universe, right? Actions lead to reactions, right? Decisions lead to consequence. Again, there is no right or wrong, but following rules will lead to order, right? We don't want chaos, right? So what we decided to do was come up with 3 simple rules. And I know it's simplistic and people, it can't happen, it can't work, but it's very, very simple. If you're buying something, you want to buy it at or near a perspective floor. Now, I say perspective because for everybody, perspective is truth, right? So I tell everybody, you're a master trader. You just don't know it. And what do I mean by that? When you go into a store, you're looking for sales. But why is it when you buy a stock, you want to buy it because everybody else is buying it and you're buying at premiums? Can you imagine buying yourself or going to a store and seeing some Dolce & Gabbana pants and those pants are $500? You're not, would you go out and buy them? No, I'd wait for a sale. So why is it when we do this, we don't look for sales? If those Dolce & Gabbanas are there for $150, I'll consider buying them. So that first rule is create a buy zone at or near your prospective floor. right? So it's not going to be definitive, right? Because what we're doing
Right.
is we're trading balances of probabilities, right? Balances of probabilities aren't a sure thing. It's infinite possibilities. So what we're going to do is we're going to allocate some risk, because we know what we're doing is we're trading emotions. So if I'm buying something, I want to buy it at or near a perspective floor. Now, for me, what I use, my perspective, I like using moving averages, right? It's basically the truth. The chart is going to give you emotions, right? And I hopefully you guys are following me, because a lot of people look at these charts and they're seeing numbers, they're seeing squiggly lines, and they make something big of something that's really not. Typically, traders in general, because we're talking about traders, they're going to hold the stock on average from a week to 3 weeks. So what I'm going to use, and I'm going to look to use as far as moving averages, I'm going to use an 8, right, and a 21-day moving average, right? Now, if I'm buying, let's read rule number 2. I don't want to have fear in me. And sometimes what people like to do is pinpoint that exact bottom. That's not going to happen. Plenty of times it's not going to happen. What you have to do is you have to scale into a position so you're not nervous if that thing starts pulling back, right? So if I'm buying something, I'm going to scale into that position. And I like to use a 3-bullet system. I was in the military, so I know that every bullet is accounted for, right? Everything has a serial number. So I'll name my bullets. If I'm going to add a stock, I'm going to add a starter, right? Because what if that stock starts to rally and I'm not in it? I don't want to get the fear of missing out, and then I'm going to jump on it, right? So I'm going to wait. And if that stock pulls back at or near my floor, I'm going to add a pullback. So my bullet number 2, I'll name it the pullback. And then bullet number 3 will be the last entry. Maybe it's on a confirmation above the 8-day moving average. Maybe if it breaks a key level like the 21-day moving average or the 50-day moving average, I'll add some more. So I'm positioned in, but now my hands are not clammy. I'm not nervous about being in the trade. And then rule number 3, this is the one that everybody gets wrong. Immediately set your sell order up to your personal profit margin. Now, that personal profit margin is something that you have to pick. You don't have to go and ask every trader on FinTwit or see what they're telling you, because half the time they're not following that. And maybe that's, going to astound people right now. Half of the people on FinTwit, and not to talk bad about them, they don't even put a price next to their ticker symbol, or they don't put a chart there. So now I'm going to ask you guys, when you guys go into a shopping center and you go pick something off the counter, do you just literally pick it off and then just go pay for it? No. You check reasons to buy, right? So one of the simplest things that you could do is follow 3 simple reasons to buy. Maybe it's the collective conscious, right? Hot sector. What's hot? Maybe it's the math, right? Simplistic. Look at the chart. The chart's not going to lie to you. And then number 3, the price, right? Supply and demand, laws of economics. We want to make sure that this stock isn't bloated. It's not dilutive. So you don't want to pick something with a huge share structure where you got to sit there and watch paint dry, right? Mm-hmm. So if you notice, that's the only thing I use. Now, fundamentals, schmundamentals, right? As far as what I'm doing here, I'm practicing the law of infinite return. And what that states, I'm going to start off with the least amount of money that I'm not emotional to, right? I'm not emotional to loss because I know I could lose it all. And then what I'm going to do is I'm going to practice infinite return, right? And why do I do that? Because my objective is not to get a shitload of money, right? That's not my objective. I want to utilize the time that I have here in this earth, not to worry about it. So you want to operate in the have and not in the have not. And I know this sounds crazy, but it to me, it's worked for me and it works for a lot of people.
And I think, like you said, a big part of trading, I think there's this get rich quick mentality, right? And the one thing I've learned is that very few things in life that are worth it just happen like that. And so the law of infinite return, it's about compounding gains. It's about little by little becomes a lot. It's about using your time efficiently so you can continue to accumulate wealth in a way to make your life easier, to provide for your family, maybe quit that 9 to 5 that you hate. But it's not, there is no such thing as like one big get rich quick type of situation. And that's why I love this mindset. It's all about having a calculated plan and just working your way up there.
Right. And I think that that's the misconception that you get through social media. You know, when you're looking at these things, you're basically getting a dopamine, right, effect. You're seeing these guys start flashing what they have, and then you start seeing them post their accounts. I'll never do that. And I'm not saying that it's a bad thing to do it or not. That's not what this is. I'm not judging people. But your main thing, what you're doing here, is basically taking money, right, fiat currency that you know per year, it's losing 20% per annum. That's a fact, right? I'm not making it up. Since 1913, right, the introduction of the Federal Reserve, you're losing value to that money. So you can't put that money in a bank account, in a savings account, and get the return. So rule number 3, what you need to do is come up with something that's autotelic. Auto meaning automatic, telic meaning the relationship between your mind and your heart. You believe in that percentage. And then make sure that you're selling stock on the way up, because if you don't sell that stock, right, especially in small caps, you know this, people will market sell, and then before you know it, and we saw it with a stock like BRQS, which was a beautiful bottom play, frustrating to me to see it go to 160, and then the following day it's right back to about 90 cents. And to me, that's retarded, and I apologize for using that word. But it's just, that's because nobody has their sell orders. And you've read Market Wizards, right? Well, you know what Linda Rashke says. She says it's not so hard to get into a stock, but knowing when to go get out, because it's unsustainable when nobody is selling.
Nobody wants it anymore. Yeah.
Right.
And, you know, in regards to, if we can pull up the rule of 3 again real quick. Okay, so in regards to setting sell orders up to your personal profit margin, I'll tell you why this one was a game changer for me. Because my instinct is to buy something, and the day that it's hot and it's running, maybe I told myself, okay, this stock was $2, theoretically. Let's say at $3, I was ready to pull out, I was ready to lock my profits and move forward. But what I end up doing when the stock is running is I'll sit there and I'll look at the chart. It's going up, it's going up. It's going up, it's going up. Okay, now I'm excited. So originally, if I had a price target of $3, now I'm like, well, what if I can get more out of it? You know? And what typically ends up happening in that circumstance, which is what used to happen to me all the time before, was sure, we may go above 3, but as I'm holding out for that higher number, shit starts crashing down. And then what do? I end up selling on the way down, and I end up giving a lot of my profits back. So in order to, you know, kind of take the emotion and the confusion and the indecision out of it, if I have my sell orders in ahead of time, bam, 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 I can make sure I'm locking those profits pre-market, after hours, anytime there's a spontaneous pop, and I'm not just staring at my screen all day. And then the other side of it, radio, is, you know, we always hope for potential. We always say, okay, I sold at this level, but what if it's still got juice? What if it goes up higher? How do you go about navigating that?
Okay, awesome. That's a great question, right? For the newbies that are listening, you have to lock no matter what, because your objective is growth, right? So, you know, when I taught you first, I didn't teach you on the first day, day 1, just in case. I didn't. Because if I would have, you would have blown up your account, right? You need to, it's almost like being in a Brazilian jiu-jitsu school. You can't just go to a brown belt. You got to start with a white belt. But I am going to tell you what I do, right? If you guys can, just do me a favor and put up the chart for GOED, GOED. This was a stock that, and please just put up the 8-day moving average. That's all I want. The 8-day moving average on the GOED. Right?
It's just a second, we'll pull that up.
I don't know if I gave you that chart, but hopefully if he can kind of shoot one there, I apologize, because that one
Yeah, let
has
me
a
grab
gift.
that.
It gives you a good example. So what I'm going to talk about is I use the 8-day moving average, right? That's my perspective. So when that stock gets above that 8-day moving average, up to and over 30%, you're going to start seeing a lot of people start locking profits. Some people will use the VWAP, the VWAP. I'm not using exponential because I'm not a day trader. I'm more of a swing trader. But when I see a stock get above that 8-day moving average, right? Get really far up to and over 35%, that's going to tell me, wait a minute, that thing acts as a magnet. It's going to start coming back. If you look at the move, every time that stock got away from that 8-day moving average, it came back. So if I'm locking profits up to and over that 35%, that's it. I'm locking profits. And then I'll hold maybe 20% just in case. I don't call it free shares because nothing is free in this world.
Mm-hmm.
All right. Because that's money right there. But when it starts to pull back, you know what I'm going to do? I'm going to check how much profit I made on this stock. And then I'm just going to use 20% of my profit. Now, this is the problem that a lot of traders do. They don't like that. They want to add a shitload of stock. If they made 10 G's, they want to get 10 G's back. No. Because then what if that thing rolls over, it has an offering, then you're screwed. No, just use 20% of that. 20% I'm looking at right now was at $3. The stock ends up rallying, hitting a high of $4 and about 60 cents. And again, it got away from the 8-day moving average. Look where it's at now, $3. Why? Because you only sell your just in case shares, right? When it gets up to and over 30%. For OTCs, it's a little bit different. Or number two, if the stock rolls over and closes below the 8-day moving average on 2 consecutive days. And if you notice, look what the GoEd did. It rolled over, closed below the 8-day moving average, and then hit support at $3. Right now, you saw 2 consecutive green closes. So what would I do there? I would use the floor as $3, 2 consecutive closes above $3, 2 consecutive green closes. I'll look to enter again, right? I'll look to enter that stock again, and then I'll trade it up to that resistance, which is around $4.50. Is it going to happen? No, it's balances of probability. Remember what we said. It is what it is until it isn't, right? That's the trend is your friend until the end.
And that is something that I want to revisit because a lot of times, even so, let's mention ATOS, Biostock. I've played it in the past. Beautiful climb. I had a friend reach out to me and ask, I want to say he reached out to me and said, hey, ATOS went from like 5 to 7. Do you think I should buy now? And I pulled up the chart and I looked at it and I saw how far it had strayed from the 8-day moving average. I saw the RSI was getting hot. And I told him, that's where I brought up the 8-day moving average acts as a magnet rule. I said,
right.
I'm not telling you not to buy. But what I am telling you, if you go back and look at the history of this play and the chart, every time we stray too far from the 8-day moving average, what do you see happen here? We typically end up getting a pretty deep pullback. And
right.
So I advised him, hey, if I were you, I wouldn't, because balance of probabilities leans towards us seeing a bigger pullback. And normally the further we stray, the deeper the pullback is. And what happened is I explained the lesson. He understood it really well. He said, okay, I'm not going to buy it. It went up for the next 3 days. So, but here's the thing. And what I was clear about, I said, it doesn't mean it won't continue to go up. It's possible.
Right.
But it's also very possible that you'll get the deep pullback. And a deep pullback ended up happening. It was just a little bit later than anticipated. So when you say balance of probabilities, I mean, the market is all about uncertainty. There are zero guarantees, but if we have tools and indicators that typically guide us a certain direction the majority of the time, then it's important to use those. But know that there will always be exceptions, and that's just, a part of accepting the uncertainty and risk that we see.
Right. And what you're saying there, in short, right, what we're doing is we're not really trading fundamentals, right? What we're trading is emotions. two drivers to this market. You already know what they are. It's fear and greed. That's what it is. As much as people are going to tell you, no, it's not, man, this company's going to do this company's going to do that. What it is exactly what you said. When we were buying ATOS, what were we buying it at? $1.38.
Those were the days. Yes.
Right. So, and then it hit a high of $10. Now go look at, if you can, type in ticker symbol GSM if you can. This is a stock I don't even tweet about. I'm just very, very silent on it. When I was buying
threading
this stock,
that 8 day.
there you go. And
beautifully.
52 cents I sent this out. And to this day, I still have my just in case shares. There's no need for me to post these things. All right. Trading has to deal with awareness, but there are stocks that you can start buying and not worry about them. Like when Atos was at $1.30, people hated it. That's when I want it. Like look at ticker symbol DSS. They hate it. Arcon, RCON. They hate it. Right? PLX, they hate it. This is when I like to look at stocks because that's leaning the balance of probability to a move higher. Is it a guarantee? No. But that's but that's why I'm using my floor, right? And I adjusted my floor based on the fear, right? The fear factor that happened this week, right? Everybody started saying, that the markets were gonna, but it never confirmed, right? We have our 3 indicators which we used, and we did actually a Discord live, and we talked about it, and it did exactly what we said. And it's not that I'm a Baba Vanga or a clairvoyant, right? It's not that. We're doing is we're just basically anticipating what's to come. And I hope that kind of helps the cause here.
Well, and so I do want to talk about something because we talked about how we lock profits, but we didn't talk about how we exit a trade. So again, like I mentioned, on Thursday, we saw a deep red pullback, and a lot of people, if they had stop losses set up, would have been stopped out, which is why I don't like automatically putting one in place. So tell us a little bit about, your strategy, your style of exiting a play, and why you do it that way.
Okay, first off, just remember, there is no Mayweather in trading. All right, that's number one. You're going to win and you're going to lose. So be prepared. So the way you lose, okay, you're going to lose honorably, right? But you have to follow these rules. The rules that I follow is 2 consecutive days. If that stock closes 2 consecutive days based on a swing trade, right? I'm not investing because I'm not talking about Bitcoin. What I feel as far as Bitcoin. I'm talking about a swing trade. If a stock breaks below my floor on 2 consecutive days, whether I'm using the 200-day moving average or a line of symmetry, if on Monday the stock closes below the floor, if on Tuesday the stock closes below the floor or like towards 330, 345, I know that's the point of no return. It's like I'm at a baseball game and it's the 9th inning and we're losing by 9 runs. I'm going to start to leave that ball game. So that's equivalent. And I want you guys to think of this, right? Think of yourself in a building and you're having dinner with your kids and your lady, and all of a sudden you start smelling smoke. Now, all right, smoke, maybe somebody's burning something downstairs. Now, all of a sudden, you start seeing the sprinklers go. You're hearing sirens, right? Now, all of a sudden, you're hearing alarms, evacuate, right? Are you going to go down to the 5th floor and just wait it out? Or are you going to just get GTFO? I'm going to GTFO. I want to live another day, right? So that's basically how I do it. And I think I sent you a chart on Clover, right? Everybody was jumping on Clover. Clover, right? With Shamat, and no gripe on Clover, right? No gripe on it. And I'm not saying that it's a good one or it's a bad one. But during that time, I said, look, if this thing breaks below this flag, the lower part of that flag, it's going to come down. If it breaks below that line, we're going to come down. You hear me?
Yeah, I can hear you.
Okay, so that stock broke that floor, and sure enough, came all the way down. People were just holding on for dear life. And then what did we do? Silently, when the stock confirmed above the 8-day moving average, got back in, and then the stock rallied higher. It had no need for a tweet, right? And look what it did. And let me tell you this. You can do this with every market, because I know a lot of you small cappers you fringe upon the OTC. And I know that I'm going to put you on the spot, but Swing Pony, do you trade the OTC? You trade it the same way, right?
I do. Yeah. So, I think even when I had started trading, I didn't know what the OTC was. I did hear people say, oh, it's volatile, it moves fast, it's totally unexpected. And I think the most important thing with trading OTCs is just having a plan. And really, if you have a plan for small caps, big boards, whatever, the same plan can apply here. It's just about having something to help you manage risk and knowing when to get in, knowing when to get out.
Right. And the market is very cyclical, right? Because there's times where small caps are just pure shit, right? You know that. And if the market doesn't like the news, give you an example. Remember when it was the whole thing with the president and, when it gets into the politics and all of a sudden the Federal Reserve is hawkish on raising interest rates. Now all of a sudden yield is up and just people are just unloading stocks. You don't really see that too much on the OTCs. So sometimes you have to be able to bounce around. All right. So some of the things that I tell people is trade your stock like you tie your shoes. And I guarantee you that most people tie their shoes the same way. Right? So why trade everything differently? I don't.
Well, here's what I would say in regards to that is that the market is relatively inconsistent. Like any news article, any, Jay Powell is about to get on and go live, or they're about to put regulations on crypto. Any little thing can shift the market direction. The market's very inconsistent. Or, a stock has a great catalyst or news and everybody ends up selling. And you're like, well, shit, I thought that was great. What's going on here? So I think the biggest thing is if the market's inconsistent in how it operates and you're inconsistent in how you operate, you're kind of shit out of luck, But if you take the inconsistencies that the market gives you and you stick to one strategic plan always that doesn't really have variables that are changing all the time, then you can leverage that. You have an edge. You have an element of consistency that protects you from everything else that's going on out there.
Right. And one of the things that I say, love it. I love it. When I hear these noise, basically it's giving you an opportunity. And one of the things that the great Marcus Aurelius says, amor fati, love fate, right? Love everything. So when you do get that noise, you get opportunity. Do you remember XRP? You remember when they said, we're taking it off Coinbase? I put up the chart. And what did I tell you guys to start buying at? Do you remember that? 14 to 16 cents? There you go. And now look at what it did and where it's at right now.
Beautiful. Went up to, did we hit 2?
Well, we hit $1.90. Yeah, we hit $1.90. And again, that's basically noise. Fundamentals, schmundamentals. You hit a demand level, right? You get above that 8-day moving average. And look, we added at a perfect level and it's trading much higher. So,
well, something I want to discuss too, since we talked about how high up XRP went. So a lot of people struggle to determine, okay, where do I lock profits? I know what I used to do is I would go look on Twitter for validation. Has so-and-so sold yet? Have they mentioned selling? Did they say what their price target is? And I think that's really, that's super detrimental because everybody has something different. Some guy might be trading with a 10 grand position. They have 10K in the stock. I might have 1 grand in the stock. So if he wants to scale out at a smaller percentage, he probably made a lot more than I did. Like the way we trade, everybody has different variables and different expectations and different things that sort of satisfy what they're trying to achieve. So, how do you go about being confident in your number, which I'd like to throw up the burger picture if we have it. Because I think so many of us, we try to nail, the perfect bottom and the perfect top. Right. Everybody wants to make sure they're getting the whole shebang. And it's not about that. To me, I think it's all about the whole concept of little by little becomes a lot.
Right.
And yeah, I'll let you explain what we're looking at here. Besides a big, delicious burger for dinner.
Well, the delicious burger. What we see here is that, you know, when we're eating this burger, the meat's in the middle. We're so concerned about reaching that top, you know, that top of the mountain, and also getting the bottom. But that's basically fear of missing out and fear of loss. You don't. Who cares? You know what I mean? In the end, you know that dollar is getting devalued. So even when you go to that 9 to 5, you're losing value when you're working shitload of hours, right? So if I'm looking to buy a stock, I want to focus on that meat in the middle. So you know that you're actually putting your money to work, and you're looking at a personal profit margin that you believe in as much as you believe in breathing. Now, use math. Like, let's say you love following, let's say, somebody, you mentioned the lady, Miss Izzy. Maybe that's your strategy, or you like to follow the guy from Saved by the Bell, right? Then check his history, right? See when he sent it out on the date. If he puts a price, you're gonna have to chart it, because I don't think most of these people put a price. And I'm not bad mouthing them, but once you get from its inception to how high it went, write the profit, write the percentage, then grab how many stocks you did, and then divide them. That's called statistical mathematical averaging. If I did 5 stocks and I come up with 120%, and I say, damn, that's 120%, I really don't believe in it, then let me divide it by 6. I'm not 6, by 2. That's going to give me 60%, right? So what if I sell some, because I know a bank's not giving me a 19% return, right? Maybe I'll sell some at 19%. Maybe I'll sell some at 28%. And then I'll put my last sell up to 60%, right? And now when I'm in the gym, having a great time working out, I'm getting my alerts, you know?
There's
Now
nothing more satisfying than having that alert pop up.
Right.
And a lot of times it's funny too, because it's, you never know when something's going to hit. Sometimes you have a favorite stock that you're like, oh, I want to put more money in this one because I'm passionate. I know it's going to go. But then it's the one you don't even have that high of conviction in that suddenly takes off after hours. You know, so I think it all just confirms that you can't predict exactly how things are going to play out. You just have to be ready, prepared, have your sell orders in, and nibble at those profits, because nobody ever went broke taking profits.
Exactly. And don't and expect that, though. Expect for you to miss stocks. And just because you miss stocks or you're in a bad stock, don't let it hinder your next. Just continue to follow the rules, right? Because if you expect perfection, and I say this, remember I said there's an equation. Patience plus discipline equals profits, while, right, high expectation plus impatience equals losses. So what I want people to understand, you're going to get good at this, but you're only as good as how confident you believe in it. And that's where meditations comes into play. You know, learning to have that balance, being able to let go. Remember, we went over your account and you were like, should I sell this? But I don't know. I'm down. And then you told me, you know what? When I sold those stuff, I just felt so good. Yeah, of course.
A weight lifted off my shoulders. I mean, you spend all this time looking at, for anyone who doesn't know, Mara was my first trade, and I had put just like $50 into it, and it went up significantly the next day. And I was like, okay, I've got the hang of this. This is easy. And so the next day, I put in a pretty sizable chunk of change from my savings, thinking I had gotten it all figured out. And then I bought at the top. We've all been there. It's every novice error, we buy at the top. And not scaling in, I put it all in at once. And over the course of the next, I don't know, let's say week and a half, however long, red candle after red candle after red candle after red candle. And the sense of just anxiety and dread and seeing that in my portfolio every day was terrible. But I had a friend advise me to just cut my losses, because he said, if you don't cut your losses, you're going to lose all the opportunities that are ahead of you. You're taking, you know, the draining energy from this and you're applying it to other things that could be making you money. So cut your losses and move forward. And I'm telling you guys, like, the minute that I did that, I didn't care. Like, I didn't care that I lost that money. I felt good. I felt light. I was ready to tackle what's next, which is actually radio right about when I stumbled upon you and like your style. But yeah, holding onto a bag, so to speak, it weighs on you. So it's really good to have a plan and to also just know when it's time to have a clean slate and move on to something new. All right.
Looks like we lost radio there for a second, so
We
we'll
did.
bring him back here. I'm sure he'll be back in 2 seconds. But definitely, just keep. So one of the things that happens often, that happens to me, is I try to usually do a little bit of a sellout in two. So how do you usually sell out? So is this a method where you're selling out in three scaling outs, or would you scale out into twos? So how do you approach that scaling out?
So I typically like to scale out in three. Well, here's what I like to do. Let's say I'm scaling out of a stock. I might do like 25% of my position at this amount, 25% at this amount, 25% at this amount, and then I'll save the last 25% as those just in case shares that we talked about. So that way I have my agreed upon orders that I put in, and then I have that section that I can just write out and not miss out on potential.
And you
Radio,
never know.
we have you back.
You never know. We got radio back, guys. Smash the like for radio being back. What's up? What's up, guys? You guys enjoying it? Let me know in the chat what's going on.
Awesome. I apologize because I think I didn't have my phone on charge, and I think this thing burns the juice. So now I just plugged in. I apologize for that.
It's all good. Welcome back. Okay, so we've talked about the burger. We've talked about the rule of three. Radio, you did bring up meditation, and I think, so emotions and mindset, they're a huge part of trading, right? I know for me personally, there have been times where if I had a bad trade, I would have a bad day. If I had a good trade, I had a good day. In the moment I realized my existence and being was dependent on what happened in the market, I was like, okay, that's problematic. We need to take a step back. We need to not let, our portfolio, our value for the day dictate how we carry on for the rest of the day. How do you manage that? Do you still deal with that? Are you better at just having peace of mind regardless of what happens?
One of the things is that, you have to understand we're human. And as much as, I've dabbled in psilocybin, as much as I dabbled in DMT, I'm still going to have the ego, right? That's your flight to safety. That's just, we're humans. So we're going to get upset. And you've heard me sometimes get upset. But the main thing is that you have to understand that that's part of being, right? My thing is that you getting mad absolutely does nothing. Punching a wall, because you got into a stock and you lost money, reverse split or offerings, it's going to happen. So expect it. Just understand that it's infinite possibilities. So be ready for it. You have to have balance. You have to be that monk by the lake. Just follow your rules, because if you follow these rules, you're going to win more than what you lose. And mathematically speaking, that puts you at an advantage.
Yep, absolutely. I do want to give the chat an opportunity. If you guys have any questions, we've got radio here. We might be able to take a question or two, whether it's anything emotion related, trading strategy, anything that you have on your mind in terms of how to navigate the market. Because we have a powerhouse here, and we get to tap into his brain and his mindset and get to learn from him. And so if you have any questions, hit us with them in the chat. We will get around to them.
So I know a perfect one here. Let's do a recap of the rule of three. If you had to put it in a 1-minute sentence, radio, how would you put it?
Rule of three: decisions lead to consequences. You following a simplistic rule, it's like tying your shoes. You're going to trade your stocks like you tie your shoes. Same way. I know it sounds redundant. I know it sounds boring, but trade your stocks like you tie your shoes.
We do have a question. Angel is asking, how do you find your long-term and daily picks?
Well, it depends, right? Because right now, let me give you an example. California, right? They're talking about psychedelics. So if I know that California is looking to legalize, I'm going to start looking for quality psychedelic stocks. So what I'm going to do is I'm going to run up a couple of charts. I'm a little old school, right? So what I'll do is I'll look through several stocks manually, and I'll start looking at the share structure, and then I want to see what it's done in the past. I say stocks are like vacations. If you love Cancun, you'll go back. So now I'm looking at ticker symbol MNMD, right? Mind and medicine. And look, it kind of got scary because it closed below the 8-day moving average. It was in a little bit of sell-off, but come Friday, we had a day one close above that 8-day moving average. So come Monday, I'm going to look at going long on this stock. Why? Because if you look at it, you're trading above the 200-day moving average. If I look at that chart, it's never closed below that 200-day moving average since a long time. So that tells me, okay, 264 is my floor. It's a little bit far below, but it looked like it put in a bullish reversal tail. If you look, you see that little wick, right? It just did a day one gap up. So if I get 2 consecutive green closes there, guess what? That's showing me remorse. So I'm going to look to buy this stock at or near this level. Now, if that stock closes below that previous low on 2 consecutive closes, that means it's failed. And I don't want to use confirmation bias, right? Because a lot of people look at charts and they say, no, I want to follow these charts because what I'm seeing, I'm believing, and that's the only thing. No, you can't do that. If the stock breaks and it falls below your floor and you get an exit, right? You have to look to get out of that stock because there's 2 scenarios. Either you hit your PPM or you get stopped out. You GTFO. So when I'm looking at a stock that I'm going long, it's going to be based on maybe a dividend or based on something that I am really high conviction. Then what I do is I switch it. I'm not really looking at the daily chart. Now what I'm going to do is I'm going to look at the weekly and I'm going to use Fibonacci numbers. I'm going to use the 21-day moving average on the weekly, and I'm going to use the 34-day moving average. If you notice, I'm doing that with Bitcoin right now, right? As long as it holds that channel, right, I'm adding on the pullbacks. And why? Because I'm dollar cost averaging. That's totally different. Trading and investing are totally different things. Okay, so if you're trading IDEX, it's because you're trading it, and you've seen me. I think that's been an ATM for me. Some people get pissed off at me for that. And I added at the 200-day moving average. Remember I said that's your strongest floor. Now, if it's failed, guess what? I'm not going to get pissed off and go on social media and start wearing my emotions on, my sleeve, because you're going to create panic. That's why I don't understand why people ask me questions, with emotion, and they get a real answer. That's why it's going to create a sell-off. Don't ask people on social media. Send a private message, because what you're doing is you're going to create fear, and then everybody's going to head for the doors. So if you look at MNMD trading above the 200-day moving average, day one confirmation above that 8-day moving average, right? So I'm looking at that. As far as the long-term swing, you know what I'm looking at? Palantir. I think we've been adding that 16, $17. Have I been tweeting on that?
Nope.
No, right? What's another one that I really like? Is the Viacom. So
the Archegos situation caused that one to just.
So what I'm saying, there you go. So what you want to do is distinguish whether you're trading and you're investing. That's number one. All right, because again, everything is perspective. You may like a stock or a company because you really feel good about it, and if you feel good about it, you believe in it as much as you believe in breathing. Guess what? You're player one in this universe. If you believe in it as much as you believe in breathing, guess what? It's going to go up. And let me tell you, in 2016, I think it was, I gave to my guys, I said, NVIDIA, 16 to 18 bucks. This thing's going to be the next Apple. I believed in it as much as I believed in breathing. I sold it up to 60 bucks. But that thing, look at what NVIDIA is doing now. So
Radio, we do have we have just a few minutes left. We have just a few minutes left, but we actually have some really, really good questions I want to quickly get to before we do a quick rundown of your watch list for next week. Justin P., he said, what are your thoughts about the market being at all-time highs? Where are you allocating?
Okay. As long as that market remains all-time highs, the trend is your friend until the end, until otherwise, right? I'm following the dollar because the dollar is strong and it's going to retest that 200-day moving average. So one of the things that I would recommend people to follow is the UUP, all right? Because if the dollar is strong, the market's going to pull back. So from right now, what we did was, if you look at the IWM, because many of you guys are small cap traders, you put in a bearish head and shoulders, but you did not confirm below that neckline. That's actually a fake out. So I expect the markets to be green next week. I'm looking at stocks that are at the 8-day moving average or holding a beautiful trend. Look for stocks at or near a 200-day moving average. Look for stocks that had 2 consecutive green closes, because that shows you a reversal. It signals. Remember, everything is balance of probabilities. It's not a sure thing. But look for your sectors, right? Look for what's hot. Right now, what do I always tell you? Follow the ETFs. IBB. Look at the IBB. I think
have a watch list for the sectors.
There you go. So you know that if you're following the banking sectors, XLF, which we had kind of bad macro news, right? Look what Wells Fargo did. It took, help me out. Lines of credit. They stopped lines of credit. So people are going to look at alternatives. If you look at Bitcoin right now, it's doing pretty good. I still like crypto stocks.
Speaking of Bitcoin, we do. We have a question from Christopher Berry. Which shout out to Chris, because he's the first one that got me into trading by sending me a Robinhood link way back when. He says, Radio, you're bullish Bitcoin, right? Is that based on the chart or fundamentals? Now, I want to answer this one pretty quickly because we got to wrap up here in a bit.
Based on everything, right? Based on everything. Everybody is dovish on it. Everybody's like bearish on it as far as social media. I'm a contrarian. We do know that it's putting in higher lows. If you look at the monthly chart, you're still trading in a beautiful uptrend channel. I'm looking at if it gets down to 22 to 27,000, I'm backing up the truck. So overall, Bitcoin's not going anywhere. It's basically Web 3.0, and I'm long. I'm looking at 2026. That's the number I'm always saying to my head. And I think that Bitcoin's going to hit $500 to $1 million. And that's just, again, I believe in it as much as I believe in breathing. So it has a lot to do with what the dollar is. Fiat currencies, it's a dinosaur. You're seeing, massive amounts of countries start looking at it. Central banks are even looking. Look at Goldman Sachs. You're talking about, Warren Buffett's invested, through secondhand banks that are in Bitcoin and crypto. So they're going to bullshit you. And they did it when the tech bubble bursted. Remember, they scared everybody to sell their tech. And think about it. If you would have held down to your Amazon, to your tech, you would have been banking right now. So don't fall for it. That's what I believe in. So it has a lot to do with the chart. We're still in a multi-bull run. So.
And guys, if you're tuned in, make sure to give Radio a follow on Twitter. That's at Radio Silent Play. I mean, what we're getting a taste of on this live right now, I mean, he drops those nuggets of wisdom all day, every day on his feed. And what I really love about your style, Radio, is every time you post a ticker, you've got a chart that goes along with it. It's a big part of actually how I learned charts, was seeing the chart that he posts, looking at the indicators that he's referencing, and starting to get a hang of like, okay, at first this was a foreign language. I have no idea what any of this is. But then the more I would reference them and follow along, I started kind of picking up on different tips and tools and indicators that work for me. So highly, highly recommend that. We're going to do one more question super quick before we move on to a watch list and wrap up. Let's see over here. Okay, Colleen. She says, question, I have a couple of losers that are like 45% down. Do I cut my losses and move on? I keep wanting to sell, but then I'm like, maybe they will come back. Story of our lives, right? Anybody who's been in that position, the maybe keeps you from moving forward. So what are your thoughts there, Radio? Any advice?
Well, it just depends. Like if she's, conviction and she feels that that's going to be an investment for a long time, that's different, right? So you're dollar cost averaging, but it sounds like she's not. She's uncertain. So what you want to do is you want to get back in this game. So what I would do is if that stock is not in a channel, if the trend isn't your friend, then that means that you have to exit a trade because you have to have some gunpowder, right? Because that's going to hinder you missing out on other things. Now create a plan and just say to yourself, this isn't going to happen anymore. If the stock closes below a floor, I'm going to exit. So it sounds like you're uncertain. Yes, 45% is a big, it's pretty down. But remember, you're in infinite return. So you're already a millionaire, but you have to start being active, right? So,
and I do just want to
again, I'm not
clarify,
a financial advisor.
Yes, we're not financial advisors. So, whatever you do that you think is best for your portfolio. But again, some great insights, some great nuggets of wisdom from this episode alone here that you can pull into future trades and maybe sort of avoid falling into a deficit of 45% before it's time to act. Because trust me, I've been there. We've all been there. But yeah, great question from Colleen. Okay, Radio, what we're going to do next is we're going to dive into maybe 3 of the stocks that you're looking at for next week. We could run through those real quick.
Well, into next week, what I'm noticing is the IBB is pretty strong. And I know we're looking at small caps because that's our majority of audience. So what I'm going to start doing is I'm going to start looking at these bio stocks that I've built a relationship with. If you see a stock like Tattoo, ticker symbol TTOO, we had 2 consecutive green closes. And now we're looking to confirm above that 8-day moving average. What you can use is you can use the previous low as your floor. You have to abide by that. So what I would do now is I would look what the IBB is doing and I would position into this stock because we know the stock has rallied in the past. I think one of the moves, I think we hit a high of 360. So if
I
you
was
can
there
buy
on that
somewhere
climb
at
up.
or near these levels, there you go. So we're right at that capitulation. You see 2 consecutive green closes. You see that? And what I'll use is that bottom. You see that bottom part? I'll use that as a floor. Okay. Now the next stock that I would do, same thing, bio stock. If I'm going to look at a bio stock right now into next week, I'm going to look at ticker symbol SINT. We put a nice green candle. We haven't closed above the 8-day moving average, but we're seeing that pivot low. If I connect each pivot low, we're in a straight line. So it's showing us a potential reversal balance of probability, right? And what I would do now is, and I told you guys to keep an eye on MNMD because you had a day 1 confirmation above that 8-day moving average with a gap up. If we get a green close, the last run this thing had was $5.75, and you're right now at $3.52. And people love these psilocybin stocks. That guy from Shark Tank, what's this guy's name? What's his name?
Mr. Wonderful. Mr. Wonderful.
Mr. Wonderful. There you go. He loves
There he
it,
is.
right? So he's invested in it. So it has the power of the internet. And look, we didn't talk about the power of the internet, but power of the internet is real. As much as the Reddits are moving stocks. So you want to keep an eye on stocks that potentially can get that. A lot of people were hating that stock Wish, right? They were getting angry at it. I think we had 2 consecutive day confirmations, right? 2 consecutive green closes. If you're going to get in that now, just use that $10 as your floor and watch for that close above 1193. You get above 1193 2 times, you got upside to $15. And now I'm going to give you guys a stock as far as the OTCs, I think that OTCs, sometimes it's good to kind of jump in on these OTCs. I know you guys are gonna, what, OTCs. There is a ticker that I like, and based on psilocybin, and it's threading the 8-day moving average, and that's LRSV. And I'm putting it out there right now. LRSV is because I actually put out a tweet telling people, hey, what's your nice low share structure stock that you guys like? And that was the one that I picked out from the bunch. So the LRSV is threading that 8-day moving average beautifully, and they're a psilocybin stock. Based on what's happening with psilocybin and potential legalization, I see this one being a good one. It used to trade at 9 cents, so you have a lot
It's a great
of upside
sector.
there. There are some stocks that if you want to follow me on Radio Silent Play, you can follow me there. YouTube channel, we created a beautiful YouTube channel. You can follow me there. If you ever are interested and you really are hurting out there, I do a mentorship, which I don't really promote. Just reach out and DM me. I do get a shitload of messages, so don't feel bad if I don't get back to you. I will, and then I'll give you a couple of tools on the side. So I really appreciate you guys having me today, and I look forward to the next one. Hopefully, you guys don't go Bin Laden on me and go missing. I'm always here. You know what I mean? So
no,
I'm looking forward to you guys' growth.
Thank you so much, Radio,
Thank
as
you
always.
so much, and can't wait to see the growth. Okay, don't forget
All
about
right,
small people
take care.
over here.
No, never.
All right.
Thank you, Radio.
All right. Take care.
All right, everyone. Thank you so much for tuning into our first episode. Radio, I think, like I said, it's so hard to follow people, whether it's on Twitter or people you're just learning to trade from, and have them put together such a clear strategy and plan for somebody who hasn't traded or doesn't know where to begin. And it's just a great way to cut through the noise, not look for validation. And it's sort of one of those books you read where you could sort of pick your next path. Like, if this happens, then you go here. Or even like a flow chart. If this happens, then you go here. And the market is just such a complex beast. So to have a skeleton or a plan or a flow or an outline that you can use to navigate your time in the market and learn when to take profits, learn when to exit. Rule of 3, I can't recommend it enough. If you're here, hit the like button, smash it, as Antonio is saying. Thank you. Colleen, thank you, everybody, for the questions. We have a very interesting week ahead. Let's see if we can continue to fight for those all-time highs. As always, my biggest strategy in not getting in trouble if we do see a market pullback is making sure that I have a healthy stock to cash ratio. If all of my money is in stocks, then I'd be a little nervous if something happens. But if I have a decent amount of cash on the side, I'm in my stocks, I have a ratio that I'm comfortable with, and I have a plan, everything will be fine. Okay, before we go, another exciting announcement. We do have an amazing guest that will be coming on next week. Big fan of Radio, stand-up guy. We have another stand-up guy coming, and that is TRT, The Rock Trading. So big shout out to him. I can't wait to dive into his mind and learn a little bit about his insights and his tricks of the trade. All right. Thank you, guys. Take care, and we will see you next Sunday at 8 p.m. EST with The Rock.